Today, the headlines are absolutely on fire. We are looking at a geopolitical poker game where the stakes are not just chips on a table, they are the prices you are going to pay at the gas pump this summer. Iran has just come out with some bold claims about their strong oil cards, and they are timing this perfectly with the upcoming peak gasoline demand season in the US. At the same time, we have Goldman Sachs dropping data that shows a historic collapse in oil flows, and President Trump is pushing a drill baby drill agenda to counter the threat. So, is your summer road trip in danger? Is $100 oil here to stay, or are we headed even higher? So, in this video, we are breaking down the card counting math from Tehran and comparing it to the reality on the ground. We have a lot to cover in this video, so let's dive straight into the crisis of the Strait of Hormuz. So, why is Iran claiming they still hold the winning cards? On Sunday, this April 26, Iran's parliament speaker Mohammad Bagher Ghalibaf made a statement that sent ripples through the global trading floors. Ghalibaf is not just a politician. He is a former Revolutionary Guards commander who knows exactly how to talk to global markets. He is basically taunted Washington, saying that while the US thinks it has energy leverage, Tehran still holds unplayed supply cards. He framed this entire standoff as a game of poker. According to him, the US has already played its big cards, like releasing the strategic petroleum reserve and absorbing demand destruction from high prices. So, my opinion about this is that when I hear a hardliner like Ghalibaf talking about unplayed cards, I see a clear attempt to rattle the markets. He knows that the US is entering its peak driving season from May through September. He is basically saying, you can try to blunt the price, but Americans are not going to cancel their summer vacations. So, in my view, this is a direct threat. Iran knows that supply is tight, and they are using that fear to maintain their leverage on the world stage. Okay, so let's check Bitcoin's daily chart time frame right here. And as we can see, the current price right now is at $79,219.51. And it is currently above our major resistance right here at $78,126.93. And if we are going to zoom out, it is currently breaking the upper portion of our upward trend channel right here. So let's change the color and make it white to make it a lot more visible. So these two upward lines is an upward channel pattern. And as we can see, if we try to zoom it in for our current candlestick, you can see that it is trying to break out of this channel pattern. So if this is going to be a successful breakout, then we might see a climb to the next major resistance at 84,500.49. So let's go back to the news and let's talk about the global economy sort of survival. Can the global economy survive a 95% collapse in Hormuz exports? So let's look at the data that backs up the fear. Goldman Sachs has confirmed that many of us feared Total oil exports through the Strait of Hormuz have collapsed by roughly 95%. We are talking about a drop from normal flows of nearly 20 million barrels per day down to almost nothing. It states here that Goldman Sachs data showing the depth of the disruption. Total oil exports through Hormuz have collapsed roughly 95% from normal flows near 20 million barrels per day. And they have shared their chart right here. Gulf crude production is also down by 14.5 million barrels per day. That is a 57% drop compared to pre war levels. To make matters worse, the slack in the system, the empty tanker capacity, is down by half. So, my opinion about this is that this is not just a hiccup in the supply chain, it is a total system shock. If Goldman Sachs is right, even if the strait reopened tomorrow, we would not see a full recovery for several quarters. Only 70% of that lost supply would return within 3 months. So, as a trader, this tells me that the scarcity premium is going to stay baked into the price of Brent crude for a long, long time. So we are looking at a structural deficit that can't be fixed overnight. So, is Trump's drill baby drill strategy enough to stop the bleeding? While Iran is taunting the US, President Trump is pushing back hard. He has rejected the idea that Washington lacks leverage, pointing out that the US now produces more oil than Russia and Saudi Arabia combined. Trump is urging China and European buyers to stop looking toward the Middle East and start redirecting their orders to American producers. He's even telling UK allies to start drilling in the North Sea to secure their own energy future. So, my personal opinion about this is that Trump is playing a high stakes game of his own. By telling voters that pump prices may stay elevated until the November midterms, he is being unusually blunt about the pain. He is also using this as a platform to push for total energy independence. So, my take, even if the US drills more, it takes time for that oil to hit the global market. In the short term, the Hormuz gap is too big to fill with American crude alone. We are in a race against time before the summer driving season peaks. So, the next question is, will Bob Al Mandeb become the next major oil choke point? In a Ghalibaf balance sheet of supply and demand, he mentioned something very specific: Bob El Mandeb and regional pipelines. He noted that while Hormuz is partly played, these other areas remained unused. So, my opinion about this is that this is the part that should keep everyone up at night. If Iran or its allies decide to activate cards in the Bab el Mandeb, we are not just talking about the crisis in the Persian Gulf. We are talking about a complete shutdown of the main artery for global trade between Asia and Europe. To me, this suggests that the current $100 Brent price is actually a bit conservative. If those unused cards get played, $120 or $130 oil is not out of the question. So, how will peak gasoline demand shape the November midterms? The punchlines of Ghalibaf's message was simple: add summer vacation to the right unless they want to cancel it for the US. He is betting that the American consumers' refusal to give up their summer travel will keep demand high regardless of the price. So, my opinion about this is that he is probably right. Americans love their road trips, but this creates a massive political problem for the US administration. If gas prices stayed elevated or continue to rise into the summer, it becomes the number one issue for the November elections. The poker game Ghalibaf is talking about is not just about oil. It's about influencing US domestic policy and voter sentiment. It's a brilliant, if ruthless, strategy. So, what is the realistic outlook for Brent crude for the rest of 2026? So, where does this leave us? We have a 95% export collapse, a looming summer demand spike, and a geopolitical standoff that shows no sign of cooling down. So, my opinion about this is that my outlook for the rest of 2026 is one of high volatility and sustained high prices. I don't see us returning to cheap oil anytime soon. The damage to the reservoirs and the lack of tankers' capacity means the supply side is broken. Whether Iran activates its remaining cards or keeps them in reserve, the mere threat of them doing so will keep the market sensitive and the prices high. So we need to stay focused on the physical supply realities. The headlines will move the price day to day, but the empty tankers in the closed straits are what define the long term trend. And let's check again our daily chart time frame here on Bitcoin. As we can see, Bitcoin is trying to climb up towards our next major resistance at $84,500.49. So if this continues, if the bullish momentum builds up, then we might see a quick climb to $84,500.49. But if this news that we have discussed right here takes effect, then now Bitcoin might suffer or struggle trying to find its way to this next target or next resistance. So Bitcoin might just consolidate, or worse, it might fall down below this 78,126.93, which used to be our uh, major resistance, which got broken. It got broken yesterday due to this candlestick that has been formed yesterday. So it is now serving as a major support right now. All right, so this ends our video, and thank you very much for watching, and see you on the next one.